Assalamualaikum warahmatullahi wabarakatuh, which I respect Dr. Azam Madun, my lecturer for financial management. Today, my name is Muhammad Danish Hanania bin Baharuddin. My number matrix is 17205-158, and today I would like to present my company financial analysis, which is AYS Venture Berhad Financial Analysis. Before we start, let's take a look briefly about the company background. This company is under sector of industrial product and services, and their subsector is building, and one of their operation is prepare and sell steel products and construction materials. This company was founded by Mr. Oh Chu Ho in 1982, and today they have become one of Malaysia's major steel distribution and stockists, and they have been in Bursa Malaysia since 9 May 2012. Now, let's take a look at their financial analysis. We start off with their liquidity ratio. This is AYS Venture Berhad current ratio. As you can see on the slide, it's shown as an inconsistent growth. As well as for their quick ratio, it's also shown an inconsistent growth where both of them fell in 2019. So we can see an inconsistent growth for both of the graph, and based on the graph we can conclude that AYS Venture Berhad still can cover their operation costs, but at the same time they face struggle to repay their short-term debts and in those 3 years. Next one is asset management ratio. This is their inventory turnover ratio, which shown an inconsistent growth. Next is day sales outstanding, where it shown a decline or incline pattern, which is a positive growth for them. And the fixed asset turnover ratio also shown a incline pattern, but their total asset turnover ratio shown an inconsistent growth. So for their asset management ratio, we can say that there is inconsistent growth in turnover asset and total turnover asset ratio. Meanwhile, their DSO and fixed asset turnover ratio is showing an increasing pattern throughout the 3 years. Thus, we can assume that they have a slightly good asset management because every time their ratio fell or fall down, the next year the ratio will increase, and simultaneously their amount of asset also increased in those 3 years. Next is their debt management ratio. As we can see on the slide, their debt ratio is increasing quite high because it started with 52% in 2018 and it becomes 70% in 2020. For the time interest earn ratio, it shown a negative growth because with a decline pattern, and for based on both graphs, we can conclude that AYS Venture Berhad debt ratio is increased, and it could be alarming to them because their debt is increased, but at the same time their tie ratio shows that their capabilities to repay their debt is also decreased in those 3 years. Next one is the profitability ratio. The first one is the gross profit margin. It shows a negative growth from 40% goes down to 8.04%. For the operating margin, also a decline pattern, start with 7.3% in 2018 to 1.04% to 2020. Their profit margin also shown a decline pattern, which is start from 4.2% in 2018 to negative 1.2% in 2020. Their BEP or basic earning power ratio also shown a decline pattern. Return on total assets for AYS Venture Berhad also shown a decline pattern, started with 4.3% and end up with negative 1.2% in 2020. And last is return on total equity also showed a negative growth, started with 9% and end up with negative 3.59% in 2020. So based on all of AYS Venture Berhad profitability ratio graph start with gross profit margin until the ROE shown a decline pattern, which this indicates a negative growth for their profitability. In 3 years, they didn't manage to utilize their assets, operating expenses, investment, and their sales to maximize and generating more income and profit. And this could be alarming to the company because they bear a huge debt, but at the same time, they cannot generate high profit. Next one is the market value ratio, and this is their price per earning ratio. We can see there's inconsistent growth, but more to a negative growth because it increased from 2018 to 2019, but it fell down again in 2020. And this is their money per book value ratio, where we can see a declining pattern for this MB ratio. So AYS venture price per earning ratio have an inconsistent growth, while their market per value ratio is decreasing continuously in those 3 years. This situation may cause a bad review from their investor perspective, especially because they might think that their stock prices must be undervalued and their stock is not good enough to invest in, and they might lose more investor in the next year if they continue this uh, uh, underperformance in their uh, operations. The next one is the free cash flow. Their free cash flow showed an inconsistent growth because it fell down from 2018 to 2019, but it raised up, but it's still not high and it's still in negative terms. And this is their FCF per share or free cash flow per share. Their free cash flow per share also negative, started from 2018, 2019 until 2020, and it also shows an inconsistent growth for FCF per share. So all of the company free cash flow and FCF per share have a negative terms or negative amount in those 3 years. This indicates that AYS Venture Berhad has a negative free cash flow, or we can say that their free cash flow is inefficient because they are unable or struggle to repay their creditor, or even they struggle to pay their investor all of their dividends and interest. In addition, they show that AYS Venture Berhad not generating enough cash via their stock issued. Thus, it may not seem attractive to investor as their cash flow performance also below average and compared to another company, and this might cause a loss in investor. So, conclusion, AYS Venture Berhad did not make their best performance on their financial, especially in year 2020, because they bear losses in year 2020 due to the COVID-19. That's all from me. Assalamualaikum warahmatullahi wabarakatuh.